Lower oil prices today, and that's certainly taken a bite out of the Canadian equity markets. What is the outlook going forward? Joining us from London is Naeem Aslam, Chief Market Strategist at AvaTrade. Naeem, we were talking about potential hurdles for OPEC and what that might mean for the price of oil. What is your outlook going forward?
Thanks very much for having me. We do envisage that perhaps some sort of a bottom is already in place for crude oil. We have been immensely, prodigiously vocal about this, that the bottom will be forming for crude oil between 20s. So now the most recent low is very much intact. And we think if we do break, it would be again in between $20 to $25. We do not envisage crude oil dropping anything lower than $20, because that would even make the picture enormously more revolting and grisly for the equity market, because equity market is so much moving in tandem with the oil sector. So once if we see a sell-off in the oil market, we are also anticipating the similar kind of moves in the equity market as well. But let's talk about oil and look at through the lens of 4 different components. So you have your supply side. In January, if we look at the production by OPEC, we are still experiencing high level of production. We have new members joined in. Indonesia came back online with 110,000 barrels per day. And then Kuwait, Iran, all of them, they are again incrementing their production even higher. So there is no sort of a sign or a signal or a flag that the production from the OPEC is coming down. But yes, at the same time, we have speculations that high-cost producers, they are absolutely craving, and they want OPEC and non-OPEC members to come to the table and then look at a possibility of a production cut. And that itself was a primary chief reason that we have seen this augmentation in the price for the crude oil. But we have done a study and we looked in the past 10 years and then see, is there any element, is there any truth in this production cut meeting? So in the past 10 years, it has only taken place, it occurred only twice. And then in 2006, they cut the production by 1.5 million barrels. And again in 2008, there was a similar emergency meeting, which ended up with another 1.5 million barrel cut. But what the price action tells us that, okay, that the price does stabilize for 3 months, but after that, the volatility in this price action continues and is skewed towards the downside. So, all in all, what we are cogitating with respect to oil, if you wanted to place your bet should be skewed towards the upside rather than towards the downside.
But it sounds like what you're saying when you're talking about a bottom in oil prices, $20 to $25, based on where we are right now, that's downside of at least 16%. And you mentioned that, those OPEC production cut meetings have actually been quite rare, and when we do get them, they're not actually significant, say a 5% cut, which is what's been thrown out this part. So why would then the risk be skewed to the upside when, taking from your argument, it seems like there's a lot more to the downside?
Yes, you're absolutely correct. You're hitting the nail on the head. But where we're going to see the massive upside would be from the U.S. shale side, because their break-even points with respect to certain counties, okay, some counties in the U.S. shale production, they have a break-even of $22 or $23, and that's where the rigs are moving from the high-cost production. But again, I think, or we envisage that the U.S. shale production is going to make a difference, and this is the signature that Saudi Arabia is looking for with respect to OPEC production, because all what they care about right now is about their market share, and they are still contemplating a further cut for the Asian buyers. So this battle would continue certainly, but we don't think that this price would break below $20. Yes, there is a 16% move. That is a great trade for a day trader, but from a longer term perspective, there is enormous amount of blood has already been squeezed out of this trade. We have come down from $110 and sitting at $29 and $30 price range right now. So obviously, more fruitful trade is towards the upside.
Everybody's been waiting to see which will be the side to blink, whether it's OPEC or non-OPEC suppliers. You seem to say that it will be those U.S. producers, but non-OPEC supply, I'm looking at a chart of it, has continued to move higher and reach peak levels. So at what point in the year do you think we start to see a material pullback in non-OPEC production?
We anticipate that could take place within the next quarter. And a firm bottom would be in place by the second half of this year.
All right, Naeem, thank you so much for joining us.
Thank you.
That was Naeem Aslam, Chief Market Strategist at Avatrade. He joined us in London.